What's up, everybody? This is Ken from JetPay, checking in with another video. And in this video, I'm going to talk about a key aspect of Flare networks and the whole Flare augmentation to the Ripple XRP ledger that no one is really talking about. This whole thing hit me a few nights ago, right before I went to sleep. But I had just put up a video talking about the SEC debacle with Ripple, and it was a lot of info, and I hadn't put up a video in a while, so I just didn't want to follow that up right away. And I also wanted to spend a couple of days thinking about just how I was going to get this information out and keep it short and sweet. This is not going to be some 20-minute video. I'm just going to get right to the point. All right, right now, this is the JetPay Twitter page. That's where I spend most of my time. That's where most of the action in the XRP community is, as far as I can see. For XRP and what's happening, I find that Twitter is probably the best place to get up-to-the-minute information. That being the case, I would like to send a shout-out to Macattack XRP. He's big on the whole Flare Networks evolution going on with Ripple and XRP, and he posts some pretty interesting things. And something he posted recently was really in line with those thoughts that I told you I was having as I prepared to go to sleep a couple of nights ago. And I'm going to read one to you that was recent. It was only from 12 hours ago. Right here. Am I not going crazy when I realize that via Flare, the international container trade, supermarkets, and all retail, notary contracts, banks and money flows and securities can run via smart contracts? If that's true, you have gold in your hands with Flare. Okay, so he's trying to point out, don't think it's just a token drop. And okay, I got 5,000 XRP, so I got roughly 5,000 Spark tokens. Okay, fine, free money. There's more to it than that. Everybody knows that Flare allows you to write smart contracts utilizing XRP on the Ethereum network. And also, they've recently advanced the implementation of Litecoin as well. They made an announcement about that. So there is more going on with Spark than meets the eye, very much so. And some of the tweets that I've seen Macattack XRP post have made me feel like I'm definitely on the right track with the thoughts that I was having. So I want to add on to where he's going with his tweet. He's trying to point out how big the smart contract thing is, the big possibilities it opens up, the container trade, shipping has to arrive. There are time parameters involved, dates, fulfillment dates. All right. So let me add on to this. Think about the whole derivatives market, contracts. Most people are starting to become aware that tokenized securities is the next big evolution in the crypto space. They're going to take all the stocks on the stock market, AT&T, Con Edison, Philip Morris, all of these big stocks, and tokenize them. So instead of having to have, what is a share of Berkshire Hathaway? A couple of 100,000 right now? I don't know, something six figures for sure. You don't need six figures to buy a whole share of Berkshire Hathaway. When it's tokenized, you can buy a fraction of it. So that's going to open up whole new money flows in the securities industry. And smart contracts and tokenized securities are what's going to enable that to happen. With things like securities, fulfillments, and settlements, those are contractual things that need to be baked into the transaction. The only way you bake in specific parameters in a crypto transaction is with a smart contract. Up until now, the legacy systems were not running on blockchain, so smart contracts weren't a necessity. It was all centralized at this exchange's computer or that exchange's computer, and they had a non-crypto way of building in these parameters, right? But as the industry goes from a centralized format to a decentralized crypto format, you need a whole new way of coding in these fulfillment specifics, whether it's for the shipping industry or whether it's buying securities, a portion of securities. It's not just a matter of pay this, it's time fulfillment. Stocks are a time-sensitive fulfillment thing, all right? Even more so, options. Options have expiration dates. Okay, you can have commodities options for coffee, cocoa, grain, cereal, gold, silver. All of these options, these derivatives on these commodities have time-specific fulfillment parameters that necessitate, where crypto is concerned, a smart contract. So On the back end, you got to look at the genius of Ripple and the Flare team. They are seeing a bigger picture that nobody even saw. The whole tokenized securities market, they basically are laying the infrastructure to support that whole market. But I got the jewel. I still haven't gotten to it yet. Listen, it's about automatic payments, folks. Okay? This evolved in the 90s where with the advent of the internet, you were soon able to log into your credit card and pay your bills online. Okay? And then what happened was you could automate those payments so that every month the bank or the credit card company or whoever it was that was providing you the credit could take that money automatically so you wouldn't be late. And there were a couple of ways that they encouraged the automatic aspect. One is if you were 15 minutes late, you got charged $30. And some of them, it was so messed up because if the bill was due on the 15th of the month and you went on the 14th of the month to pay it, I had one credit card that you had to get in there 2 days early because if you got in there 1 day early, they had this thing where it took more than 24 hours for the transaction to settle, according to them. So you still got charged a late fee. So they made it sort of compulsory that you either remember to get in there 2 days early or get charged a late fee, which happened to me a couple of times. Unbelievable. I'm like, I paid it a day early. They're like, yeah, well, you should have read the fine print. You got to get in there 2 days early. And they did that on purpose. Because imagine if you got 5,000 subscribers and 1,000 of them make that mistake monthly, that's $30,000 a month in fees that you made off people. Never mind the payment and the ridiculous 29.99% interest that they're probably paying on those crazy cards that were all over the place in the late 90s, right? So things evolved in such a way that people were like, the heck with it. Fine. Set up automatic payments. And then what happened was another enticement was it became in a lot of cases, especially for small loans, like $2,000, $3,000, or you go to the dentist and it's $5,000 worth of work that needs to be done and they offer you a plan. In order to qualify for that plan, never mind your credit, in order for the agreement to be finalized, you had to agree to mandatory debits from your checking account, right? A stipulation in those contracts, and even more and more now, is if you want this loan, you have to agree that we deduct automatically from your account. So I don't think I have to spend too much time conveying to you how big the automatic payments deduction sector is. Individual people with bank accounts that have to pay bills month after month after month after month, whether it's your phone bill, your car payment, your insurance payment, your little medical loan that you took out, your student loan. Recurring payments are the basis of wealth. Revenue streams are where it's at, whether it's the small real estate investor trying to have a couple of income properties, all the way up to Amazon. Okay, what do? They build the biggest e-commerce platform the world has ever seen. They make all kinds of money on the e-commerce side, but then they say, hey, look, we got, I don't know, I'm just going to take a wild guess. We got 100 million users. I got an idea. Amazon Prime, right? Subscription. Pay this every month. All you 100 million people. Now, they haven't sold it to everybody, but they know the name of the game is to get you paying over and over and over again. That's where it's at. Whether it's a magazine subscription, back in the day when I used to go get my bagel and coffee on Sunday morning, I used to love to go to the newsstand and look at all these magazines. Companies like Hachette Filipacci that owned several different magazines, they got monthly subscriptions, newspapers, monthly subscriptions. The internet came along and upset all of that. But I'm citing all of these examples to drive the point home that monthly subscription, revenue stream type wealth is the only type of wealth to really aim for. And even Amazon knows that. And if you look at Amazon Prime, that's the thinking behind Amazon Prime. And they entice you that, like, if you get Amazon Prime, you can stream these things for free. But the name of the game is pay us $29.99 a month or whatever it is, $19. I don't know what Amazon Prime is. And I'm not knocking Amazon at all. Amazon is something to study and try to be like. Okay? Incredible. Revolutionize the whole way we think. Okay? So by no means am I trying to sit here and bash Amazon. I'm just pointing out that even something as obvious as Amazon, without you realizing it, that Amazon Prime thing is the whole recurring payments model being utilized again. All of that is to drive home the point that automated payments and recurring payments are a big deal. Any entity that's looking to collect monthly payments on you for a service or a loan or anything else where monthly residual income is at the crux of the agreement is going to need to rely on a smart contract platform that can deliver this. So beyond just the derivatives market, which is huge, billions there as well, it's the everyday person, right? If you look at the three biggest banks by market capitalization or by assets are JP Morgan Chase, Bank of America, and Wells Fargo. I have a chart that shows the subscribership of each one of these. And then I think between the subscribership of each one of these, if you add them up, is about 198 million subscribers. And the total banked population in the world is somewhere, I've seen figures that say somewhere between 1.7 billion and 2.5 billion. So it comes out to somewhere between, let's call it like 10% of the banked population in the world is held by just these three top banks. All right, and that's 200 million people, 198 million people. Everybody in every bank account has some sort of recurring monthly thing going on, right? So just off those three banks alone and the amount of subscribers that they serve, you can see how huge this thing is. Just in the automatic recurring payments sector of finance, Flare and Ripple and ODL is set up to basically stake a huge claim in the financial sector. I'm looking around the blockchain arena and I don't see anybody else set up to pounce on this whole paradigm shift that's going to take place the way Ripple and Flare are set up to do it. So beyond just, hey, okay, you can write smart contracts with XRP on the Ethereum network, real cool. And they might even come out with a GUI, General User Interface, where you can just plug in the specifics into these boxes and hit submit, and it'll write the smart contract for you. They already have user interfaces that will do that. You don't have to be able to write code to create a smart contract, and they're going to get it so that you can do it on a phone with your thumb, right? But that's, one-off. I'm talking about where everybody's paying in crypto. Think 3 years into the future, everybody's paying in crypto. Whatever coin it is, it doesn't matter, especially when you have a bridge currency involved, right? Everybody's paying those automatic monthly payments in crypto, and the bank can do all the smart contract stuff on its back end. Or when they offer you a loan, they'll say, okay, but you agree to this and you agree to that. And basically, at the end of the day, can we deduct your account? Yes. If no, you can't get the loan. So you got to say yes. So all of those millions of people that they serve with all of those automatic monthly recurring payment things, right, are now going to be handled on the smart contract side, on the blockchain side. And the only people I see set up to do it is Ripple and Flare. That's the long and short of it. So if you were holding XRP and you got a Spark token drop, you'd be crazy to sell it. That's not financial advice. It's just common sense advice. You know what I mean? And now I don't know the intricacies of the Litecoin thing, but they're doing the Litecoin drop too. Guys, it's crazy right now. So remember I said it, Ken Carabello. I said that the $1 million move for the Flare and Ripple partnership with Spark token and writing smart contracts on the Ethereum network, okay, the killer application for that whole setup is automated recurring payments at the institutional level for all of the different customers on the planet, for all of these large companies. Millions and millions and millions of customers, which means billions, if not trillions of dollars. All right? So recurring automatic payments are the killer app for the Flare network situation that is emerging. All of these automated payments can belong to Spark and Ripple if nobody else comes along and capitalizes on that. Okay, so no wonder you have people coming in like the SEC trying to slow Ripple down because there's some big boys in the space that are like, whoa, wait a minute. If this company is allowed to continue running unchecked, before we know it, they'll have the whole institutional back end on the blockchain sewed up, which is almost how they have it now. That's effectively what Flare Networks does. It sews up the whole automated payments aspect of finance on the back end while nobody's looking. And then, they're like, you can convert your XRP token to a FX token and you can stake it. And to me, that's all like, so what? I'm not going to do that. Farm Flare token? Okay, yeah, it's amazing. Yeah, but I'm looking at the big jackpot. That can't be why they did it. For me to sit in my house and farm Flare tokens? I don't think so. The real deal is, while they're telling me that, they're stepping to Jamie Dimon like, you know what? You want your whole subscribership swung over to the blockchain? This is how you do it. That's what's going on. They're going to Wells Fargo like, all your 77 million subscribers that you get monthly payments from, as we merge to crypto, it may not happen tomorrow, but let's build this thing and have it so that when crypto gets in place like that, all you got to do is swing it over. That's what I see going on. And if I'm right or anywhere near right, I can't even call what Spark token is going to be worth. Lastly, before I go, I want to pull up this one thing I found on the internet. Here it is. It's a FuseBill article, and they were talking about what subscription businesses, okay, monthly payments, need to know about cryptocurrency and recurring billing. And if you scroll down, I'll put a link to this, but it just reinforces what I've been saying, okay? Early hurdle to using cryptocurrency and recurring billing. The fact that cryptocurrency is a push technology is at the heart of recurring billing struggle. Quote, without the ability to charge customers on a schedule, as with credit cards, how can subscription services effectively manage payments in cryptocurrency? It is impossible to operate a business on the assumption that customers will initiate necessary recurring payments when due. Right, the customer's not going to do it. You have to have a contract that's automatically, you can't say you're going to pay that money every month, right? It doesn't. We all know that's not going to work, right? So one such platform, Coinbase, describes their recurring payment method as a pull technology that customers initiate. However, this feature requires the use of a Coinbase wallet, and users can pause or cancel their recurring payments at any time without notifying merchants, right? So that's no good, okay? So indeed, every solution to this particular problem has involved the need for an additional service. Cryptocurrency systems simply don't inherently lend themselves to recurring billing. I'll repeat that. Cryptocurrency systems simply don't inherently lend themselves to recurrent billing. Wallet platforms such as Groundhog and 8x Protocol, for example, can help merchants create smart contracts which regulate recurring billing. This is, however, not something a typical merchant can build themselves or in direct partnership with a cryptocurrency service. In other words, you need a third-party provider to come and implement that into your business model. Who's that third-party provider? Ripple and Flare. All right, this is Ken from JetPay. Thanks for listening to me rant on and on about my eureka moment regarding Flare networks and smart contracts. If you like the content, please hit like and subscribe. Do comment down below. I'm interested in what your thoughts are. Hey, I'm just trying to figure this whole thing out like everybody else. On the last video, you guys gave me a lot of feedback and there was a lot of engagement. I appreciate that. Okay, so I'll try to come with a video as regularly as possible. And I appreciate you. Thanks for hanging out and listening to what I had to say. Have a good one, everybody. See you next time.